We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. I'm Gabe Johansson. We're here in the studio today with Trevor Howard and Mike Nuss. Dane is not here again.
I beat him up. He's in the hospital.
After the last episode. Dude, so I re-listened to that episode at 101, right? Yeah.
101, yeah.
Yeah, and I think I agreed with Mike after listening to it.
I think I did too.
It's the balance sheet. People don't understand the balance sheet.
Yeah, so because your point, for people that don't know, didn't listen to that, I thought it was really interesting. I don't care about that stuff, so good for you. But while we were talking about it, I thought I agreed with Dane. But then once I went back and listened to it, what you were saying made way more sense. But Dane kept cutting you off, and not letting you explain. Yeah. But you were also cutting him off. So it was just...
Because that's what I do.
You were saying a lot of the same things in different ways also. Yeah. I don't know.
We argue on nuance. And the reason being is he's completely right from a vacuum. I look at all the context.
We didn't get there till the end, which was fun to find out we got to the end and
we agreed. Yeah. And all it is just the difference between new money and existing money. Yeah. And that's the balance sheet.
No, I understood once I re-listened, and then I was like, okay, I think I'm starting to get it.
Yeah.
No, it was good. I enjoyed that one.
It's only taken 14 months.
Yeah.
It's great.
I like that Mike's wearing a 0 to 100 podcast hat right now.
Dude, they gave this to me when they came and presented at Investor Lab. I looked so good in this gray.
I'm jealous right now.
It's a good hat.
We need some Deal Junkie hats, man.
Didn't they mail you a gift yet?
Huh?
Did you get a gift from them in the mail yet?
No, I didn't. Maybe I should send them my address and ask them. Hey,
you're supposed to.
Did you guys forget about my gift?
Yeah,
I didn't give you my address.
That's part of their process.
No, they're great. I was just listening to them on the way in. I love what they're doing. Also want to give a shout out to Investor Lab. Mike is the fearless leader of Portland's largest real estate investment group. They meet every other month on the second Thursday, which is very difficult to remember. So go to Instagram, follow Investor Lab PDX, and there's a lot of other great information that's going on there. But you guys had a great meetup last night, 100 plus people.
Great energy. It was good energy last night.
Tell us more.
I don't remember.
Who was there?
Michael Hamilton, who was on the podcast, episode 25 or 27, 30 years old, is building $173 million worth of apartments. And
is that it?
Yeah. His stats are pretty. And it's cool because these are the projects that are finished. These are the ones that we're waiting on. And he starts talking, well, we think we can break ground the end of this year and next year, and we talked about that on the podcast interview with him.
Yeah, he had 6 years of pipeline lined out.
Yeah, and that's when you get into the permitting statistics where there's so many unknowns as far as you can see these amount of units have been applied for, but you don't know how many are in design that haven't been applied for. You don't know how many that have been applied for are going to be abandoned, and so that's where that's why it's a cycle. You can never truly measure things. You measure them looking back. You can never measure them in time. And so that was a pretty good example.
How did the audience respond to his presentation?
Dude, lots of Q&A. People curious about how he did what he did. I mean, it is amazing. I don't know that a lot of us could do what he did, honestly.
No, he is. I think he is a one of one.
Yeah.
Like a lot of times
across the nation.
A lot of times we'll say like, hey guys, anybody can do what we do. And I think what we do, that's true. But what he does, I'm not sure.
No, I think he's one on one across the nation. I don't think there's anyone his age doing that scale of what he is doing. I
don't know anybody.
I don't think, I've never heard, there's not many people of any age doing that scale of what he is doing.
That's cool.
Yeah, the most interesting things I thought from that was, one, he's raising $60 million to do that, which is insane, but he's raising that. His average raise is $3 million per person.
Yeah.
So 20 people, theoretically, are giving him
How does he get access to the big dogs like
Spending
that?
12 to 18 months, basically, before he's getting one check from someone, and he shared, I'm building genuine relationships with these people, and I'm actually taking an interest in their life. And if they're sending me deals, I'm not telling them, put your money in my deal. I'm telling them, what I actually think of that deal. Do that deal. And he's building the relationships, getting in front of these people and trying to help them.
He's acting like a partner before they're partners.
Yeah. Mm-hmm. Yeah. So he talked a little bit about that. Another really interesting thing, it was Jude asked the question of, how are you making deals work right now when no one else is? How do you get it to pencil? And he talked about how the specific unit size he is doing is a lower income, and it's still high rents because new construction and whatnot. But the unit type and size he picks is at the AMI, correct? Average medium income.
Yeah,
or area median
he's
income.
building the entry-level new construction, so it's the cheapest new units on the market.
Yeah.
And then in Portland, they require that 20% of it is low income and you rent to it, but it already fits where his rent is.
His whole project fits.
Yeah, and then he's like, it only works because I'm picking in these specific areas where people still want to live at this income and it's just nice enough product, but I get this tax break. He's like, without the tax break for 10 years, it doesn't work.
Yeah.
So he said all the other developers are picking like their locations. They're not filling their units and they're too expensive basically for what they're doing.
And then they have to make 20% of their units low income and try to make that pencil.
Yeah, and he's like, you can't make those pencil, but the way he's found that he's doing it, you can still pencil it right now.
And the way that the AMI works is there's some zip codes where the max rent you can charge based on AMI is market rent.
Yeah.
So you can essentially go in and get subsidies and get market rent.
Yeah. And the other interesting part, he's talking about like his capital stacks and how he does that with different groups and whatnot within it. So it was really cool.
So he's raising debt and equity.
Yeah, and he was using like tax credit, like all sorts of things within his capital stack. He would show like, here's grant money from the city, and this is how it converts to equity over time, and here's all these other sources of financing that I'm adding into the capital stack.
When he's going to get lending on these, does he have to bring on KPs or does he have enough net worth?
He'll have a co-GP too, so that is doing that.
So he brings on people with a higher net
it probably
worth.
depends on the project and who he has within there.
Yeah.
He could probably do some of them, but not maybe the bigger ones on his own.
Is he giving away equity for signing on loans?
Oh, yeah. So GP will take like a portion.
He works with a co-GP from the beginning. So it sounds like essentially he's got
they'll invest the upfront capital to do like the DD and all that stuff.
Yeah, and one of the way, because the problem with development is due diligence is long, it's expensive, you're spending tens of thousands.
Hundreds of thousands on
and
his
so
project.
If you have a co-GP who's now funding, it keeps you liquid, it allows you to look at more deals, you're taking the risk off the table because at the beginning there's no value. The only value is your ability to make a vision come true.
So you're looking for somebody who's got money and experience in the industry that can help you walk through the due diligence.
I don't think he doesn't need that part. He's doing all the due diligence and the experience part. But for the funding of it and signing on debt, it sounded like for him personally.
So all the soft costs and all that money you're spending for site planning, reviews,
and just figuring out if it's a deal that you can even do, right?
So, and here's an example for the people. So when we went to build, and he talked about this, of getting a contractor on board early and then having oversight on your team. And I asked, I've learned this question because we bought some land early on. We're going to build a 20-unit apartment building. We got Walsh Construction on board, and there's, when we actually got the bid to build it, which was $1 million more than we expected it to be, we'd already spent $80,000 on the freaking architect.
Yeah.
And now you have a dead deal.
Yeah.
You've bought the properties and you just spent $80,000, 6 figures on soft costs.
Which you may be able to recoup some of that with the sale or maybe not.
Yeah.
I mean, it might be worth something.
Yep. Yeah. So that was that was the first time of understanding oversight. The second time of understanding oversight was when we did build our fourplex. In the cost, the really cool design, the guy's not a developer, and we're trying to again figure out the cost, and now we've already got the design done, and that was on an option, and we have to close, and it's just now you're like, well, I will just pay more to build it.
Yeah.
That's cheaper than redesigning it. So you need to know what their job, how to keep them in their lane.
Yeah, there's a lot of land out there that is entitled that has approved plans where people have decided either they can't get the money to build or they don't have the comfort level around building it, which is really takes out a lot of the risk to be able to go in and just take a project that you can break ground on day one. The problem with it is you're going to be building their design more than likely. You can make some changes, but some of these designs, we actually have a listing that's like this right now, and we have developers looking at it and they're like, yeah, I would do that project, but the way they designed it is not right. It's too expensive to build that way, and we don't think that our returns are going to be great enough on that design. So, I don't know. You just kind of take the whole thing, good and bad, and you just have to decide if it works for you or not. So, cool. Well, that's awesome. So every other month on the second Thursday.
So May 13th, July something.
Yeah. So May 13th, we just got
11th.
Confirmation that Gabe Johansson and Paul Curley will be.
Curley.
And Trevor Howard.
Are you getting on there?
Are you going to let me on stage? Because I'll go up there with Paul.
Yeah, we'll let you. Just not Dane.
We're going to repeat the panel we did for the SRE, about a year ago?
Yeah.
Yeah, but this will be in Portland. People aren't going to know who the hell you guys are, so you're going to have to step up your game.
It's a fun story. I mean, it's going to be spiritual principles.
Yes.
That's for sure. You know where we're going with all of it.
Absolutely.
Do you know the spiritual principles of real estate episode? I think is our top 3 most listened to episodes.
Really?
Of all
And
time.
you said that was one of your favorites.
Should that be the topic?
Yeah, I think so.
Just
yeah,
the spiritual.
that should be laced
That's
in.
the topic.
Yeah.
Spiritual real estate. Yeah. Oh, this is gonna be so good in person. And
I'll start crying.
Yeah, I'll be in character. My goal will be to make Paul cry. That's my goal.
All right.
If Paul isn't,
And
crying,
now, from last year till now, Paul now is in love with Trevor. Now that I've explained to Paul that Trevor is the next Paul Curley, now Paul suddenly has this. He has a special place in his heart for Trevor. So I'm trying to explain to him that Trevor is his grandson.
Yeah.
I'm stuck in between, but I'm not wired like these guys are. They're different than I am.
that's awesome. This is gonna be so much fun. I'm really excited.
All right, what do we want to talk about today?
Okay, so I wanted to share something with you guys that I was working on because this is like kind of the stuff we would brainstorm and get your feedback. So essentially what I'm trying to do is give people a helpful tool to help them build and scale their real estate portfolios so I don't have to do it one-on-one in person, right? Just a free thing they can all use. So the idea of what I am doing is like a scaling roadmap for people at different stages throughout their real estate journey. So I have the different stages people are at, and then all the problems they are facing at each stage with the different pillars of real estate, and then what they need to do to solve that problem, like get to the next level.
Tell me what you mean by the pillars of real estate.
Yeah, so that's what I need a little bit of help with is like, are these stages, like, do you think they're correct where people are at and kind of what they experience,
Okay.
and then the pillars of real estate. So like the pillars or categories of real estate that I came up with, I think are like the main focuses of what people need to think about is property acquisition, finance and funding, property management, investment analysis, and asset management.
Okay. Seems a little out of order.
That's not in a particular order.
Okay. So finding the deal, structuring the deal, and then finding the money to do the deal, and then running the deal afterwards. Is that what I'm hearing? Property management and asset management.
Yeah. So like, I guess if you wanted to go in proper order, it'd be like investment analysis, property acquisition, finance and funding, property management, asset management. So idea of property management is how you're managing the day-to-day of it, whether it's you or third party. And then asset management is the higher level overview of you building out your actual portfolio.
Yeah, where is our equity? When does our loan expire? Where should we push rents? How can we maximize this asset?
Yeah, so the idea is like these are the things specific to real estate, such as when building a business, such as like sales, marketing, IT, human resources, right? Like those things that you need to build a business. Would you agree with those categories, I guess, is the first question, or is there more or less?
What are the categories again? Recap them.
So
It's a lot of words.
Do it in order.
So in order, I guess it would be investment analysis, property acquisition, finance and funding, property management, and asset management.
I think you can sort of lump property management and asset management together. They are two different things, and you may break that up into different roles, but that's the same basic concept, one from more in the weeds to higher level.
Yeah. But generally, you think those are...
Well, and who's your avatar? Someone that's already started and that's now moving.
So that's the next part, too. So I think I'm trying to use these categories across all avatars from, beginning to end type of thing. So I guess...
Different for somebody who owns a home than somebody who owns a
correct.
100
Yeah.
So that's what I'm going through is like, what is the differences here and how do you...
as you grow that business, like who's the next person you add to the team, because otherwise you're not going to be able to scale.
Yeah, I think your first step should actually be resource evaluation. What are your resources? What do you have? What are your skills?
So I have that too, but I didn't know if I should do it. But skills, like what skills do you have when you're at this level? So you like that as well?
Yeah, what are you bringing to the table? Where do you need to round out your team?
So the other thing I have at each level is like, okay, what is your role? What does the team look like? And what skills do you have from like a higher level overview? But you think what I list in those things kind of accomplish like what everyone would in general need to know?
Yeah, because that's going to build out your org chart. You want to look at your future org chart.
Okay, cool. So that's my first question. Then my next portion of it is like, okay, do these stages make sense for like people are kind of lumping them in the same group so it can be general to a group of people, right? So like I have 3 stages. I didn't go super high level past the like third stage just because that's not necessarily our avatar of who we're helping right now, and it's so much work to keep building it out. But so like stage 1 is someone who's done 0 to 3 deals, and they own like 1 to 10 doors probably, right? Stage 2, someone who's done 4 to 10 deals and probably has like 11 to 30 units. And then stage 3, just 11 plus deals, 30 plus units.
Yeah.
Okay.
Yeah, and that's part of, I guess it is not part of the resource evaluation, but...
So that's like the difference. So now I'm looking at, okay, between all those stages in the 5 categories, what is the differences in those stages? So then like my goal is to actually like identify the problems they have, what they need to do to solve them, and then break down in detail like what that actually looks like for them. Okay. So like for stage 1, for example, for property acquisition, like where they are at, they're probably unsure what a deal is or what deal types they can even possibly buy and how to find them. So then getting to the next level, they're learning about like beginner investment methods, how to actually set goals, and then pair that investment method with the goal to get there. And then they're finding probably realtors, lenders, and professional help to help them go along the way.
Yeah, I would say in the beginning, you're sort of feeling things out to figure out who you are and what kind of assets you like. And once you've tried a couple of things, you start to build a buy box. I think that a lot of people hear us talk about a buy box, and then they sit there and try to figure out what their buy box is, and they're not really going to know what that means until they've done a couple of deals. And you'll start to learn what you really love and what you really don't love about real estate, and it'll help you to develop that buy box.
Yeah, so if you guys will give me like feedback like that on all these things, that would be super helpful as I'm building out. So okay, so that's property acquisition for a stage 1 person. Then you have finance and funding. So where they're at is they have little to no money probably. They're unsure like what loan types are even available to them, and they don't know where to get started with that. And then for them going to the next level, they're tracking their personal finances and learning how to actually save money to invest. They're learning about using like probably low down residential loans, and then owner-occ loans to acquire investment real estate.
You know, there are people out there that are scaling their portfolios, and they're just using themselves in property management. You don't necessarily need to build like a family office to build a portfolio. I think if you're really trying to do something big, you need to start talking about, we have an asset manager, we have a marketing person, you have a front end and a back end, and it's like every other business. Every business has those things. You've got IT problems. You're trying to figure out what software to use. You're doing all this stuff. But I know people who just buy real estate and hand it over to their property management, keep going. I don't know if that's the most successful way to do it, but you don't necessarily have to build out fully a team. But what you're talking about is like, I'm going to be talking to, like when I'm buying 1 to 4 units, I'm going to be talking to a totally different set of lenders looking for a totally different set of criteria than when I go 5+ unit and I'm commercial and I get into that market. Now I might be talking to debt brokers or commercial lenders, and they're asking me for things that I have no clue what they're even talking about, because I'm used to these residential lenders that are so worried about my credit score and my W-2 and all the things to make sure that I can pay for something. And now suddenly we're talking about executive summaries and pro formas and all this other stuff. So the world just sort of changes as you move into bigger assets and grow your portfolio.
So that's what I'm trying to break down between these stages of like, okay, you don't know about this stuff now, but this is the stuff you'll need to build. And then I'm giving them that stuff. Like, so here's an executive summary template, and this is when you will use it.
So start at the first one and let's go through it. Have we already done the first one?
Yeah.
Oh, are you just moving through it faster than my brain can go, maybe?
Well, and then
Trevor likes to move. His brain moves faster than mine.
So still in stage 1, like the 0 to 3 deals person. So like when they're looking at property management now, so like when you have 0 to 3 deals, you don't even know where to start. You don't know how to screen tenants. You don't know how to fill a unit. And then so to get to the next stage, you're learning basic landlord tenant laws, how to actually screen tenants, run background checks, advertise a property online, and then how to actually like collect the money and track it.
And I hear you give people advice all the time when they buy their first or second deal, they should manage it themselves. So
I like that.
So they understand what it is, and they can learn the laws, and they're going to break the laws because there's too many of them to even figure out how to follow them. But it might be a painful part of the process, but it teaches you what's going on and why you should respect your property manager once you do hire them. What I would suggest is you don't go too far down the road in self-management, or you will never scale, because every time you look at a deal, you'll be thinking about all the negative things that it brings to your life.
Yeah, I like managing the first couple doors.
That's a good way to look at it.
Yeah. You got to get out of it eventually because you have a better use of time. But like, I like managing the first few doors, and I like turning like the first unit too, so you actually know what these things cost. Like,
Brian made me go paint units and lay flooring. It was the worst part of it.
Yeah, it sucks.
Oh,
like,
God.
I would never do it now.
That's terrible. I had to lease units. That's about as bad. But you need to go through that process. That's how you learn the market. How do you know what something is worth from a market rate standpoint? You show it 10 times to people that say no 9 times?
Yeah, and how do you know that when you hire somebody that you're not getting screwed, or that they're actually doing a good job and you're getting your money's worth?
You know, and even like in our property management company, one of our pride and joys is none of our staff came from property management. And so understanding the industry, and like, we don't want people in the industry in our company because they come with the tainted bullshit that comes from other companies. And so I only knew that because I've worked with other property managers and saw how I didn't want things run. So you have to get in there to truly understand what are the processes, and just because this is how we've done it for 50 years as an industry, is that the proper way to do that? And it's funny, when I got into the Rental Services Commission, that's where the landlords hated me, because I got in there and said, well, why are you doing it that way? Like, why are you doing it that way? Like, well, that's not true. And, you know, just because these processes that were created were done decades ago, money was slower, we didn't have technology, you know, it's just, we should be adapting. And if you're just paying someone all the time, you're not adapting at all. You're just writing checks. So
one thing I'll say about your list is the investor yourself, who is our listener today hearing this, your role is really on the very front end of this process and on the very back end of this process. So you're out there chasing deals, and then you're making high-level decisions about how those deals are operated, and everything in between is either hired out third party or you're bringing somebody on your team to do it. So when I say front of the house, back of the house, it's like we have a company with 4 partners. Trevor and I act as acquisitions because that's how our brain works. We like to chase deals, win deals. We know who to talk to. We've networked with certain brokerages, and we've built a reputation to go out and find those deals. But Mark and Dane are our partners who are doing more of the asset management side and the development side that's a lot more detail-oriented and paying attention to the assets we already have, because Trevor and I forget about what we've already bought. We don't even remember that we own them anymore because we're so focused on looking forward to go find the next deal. You got to have either, you might be of that mindset where you're thinking about your buildings all the time, and that's fine. But if you want to be in continual growth mode, you need to have somebody on the team that's focused on moving forward. And you got to make sure the buildings you already bought don't fall apart because you're not paying attention to them. But everything in between finding brokers to go get you deals, finding debt brokers to go find you money, having asset managers that, or having not asset, but property managers who are running the day-to-day, screening your tenants, leasing your units, and doing all that. There's a lot of the stuff in the middle there I feel is very maybe not low level, but it's something that can definitely be hired out that you don't have to do yourself. But on the front end, the analysis and acquisition side, and on the back end, the asset management of how that portfolio operates really is driven by you.
Yeah. So like, that's the point I'm trying to get to with these two, is it looks different at different times because you have different skills throughout like what you've learned at the different levels.
Absolutely.
And there's different things you like to do.
Yes.
And you may like to do some things that aren't necessarily the best use of your time, which you got to be careful. I've had partners that wanted to go mow the lawns at our properties because it was relaxing. It's like,
but again, if that gives you some mental health and you're better at what you do because you take an hour to go mow the lawn.
But then when it's like, hey, I want to buy this property, but it's got 3 acres of lawn, and they're like, I don't know, I don't want to buy that one. It's got a big lawn.
Now it's problematic. Exactly.
Now we got a problem.
So yeah, absolutely. I did want to point out like the difference between asset management and property management. One really good example is in the maintenance side of it. So a property manager, all they do, they just respond to work orders. They're not preemptive at keeping your
It's reactionary.
It's reactionary. An asset manager, and this is what I do with my maintenance guy, is I want you to go to our properties and I want you to look at them and I want you to have plans on what's not getting called out by tenants and are we maintaining this building? Because tenants only care about their tiny little space. The property is so much more than that. And the property manager will not do that for you. Not going to happen. You have to do that.
Yeah. So next thing on here I was looking at was investment analysis. So as you're a beginner starting out, you're literally not sure how the 4 ways you are to, like, the 4 economic benefits of real estate. Like, you don't even know what those are. And you don't even know how to run numbers on a deal.
You know you want cash flow because that's what
the main
everybody's
thing.
doing.
Yeah, it's probably it. And then, like, so by the time to, like, step up from there, you understand the actual 4 ways you make money in real estate, and then you know, like, basic investment analysis.
So recap those 4 ways for our listeners.
Yeah, so you have cash flow, loan pay down, appreciation, and depreciation.
Okay.
And then the next part is asset management. So you have few to no assets, and you're unsure what an asset manager does. So, like, you just need to get started is one thing. So start acquiring assets and then just starting to track them basically on an SREO.
You know what I found is the personality type for an asset manager and a property manager and an acquisitions person are like 3 totally different personality types. Mm-hmm. Like, acquisitions, we are just gas pedals, hard to see downside risk. We're drug addicts. We're driven by, we got to do the next deal. Where's the next fix? You get into, property management. Property management is like control freak. I want to run everybody's life and tell them what to do. And
liability.
Tell them to get their garbage off the porch. Like, that's something that, an acquisitions person would never want to do in a million years. Yeah. And a property manager thrives on it. Asset manager is like an OCD. Like, I want to sit and look at numbers all day long, and I want to drive, the expenses down. And I really want to do a deep dive and get in the minutia of how we squeak every single penny out of the deal. Like, they're in the lowest part of the weeds as you could possibly be. And I think that if you're trying to be an owner wearing all the hats, you just got to be honest with yourself. There's going to be probably one of those hats you wear a lot better than the other ones. Mm-hmm. And so you may want to outsource or partner. And that's one of the reasons why I have partners in everything that I buy, is because I'm a gas pedal. Number one, I need a brake pedal. I need somebody to tell me, no, let's not do that deal. I need somebody to analyze it more closely, and I need somebody to pay attention to it after we bought it. If you're just all gas, like me and Paul are both gas pedals, probably the worst partnership I have, even though we own a ton of buildings. We love each other.
Because you're all gas pedals.
We love each other, and we love owning buildings together, and it's, in many ways it enriches my life. But, like, we don't have anyone paying attention to the things that should be paid attention to. We have good property managers, and the 2 of us are out buying as much as we can possibly buy, but we're not maximizing our assets.
So no one's doing asset management?
No. Yeah. Well, I am. I'm supposed to be. Don't tell Paul Don't tell Paul that I'm not doing it.
So would you guys want an asset manager?
I would, but Paul, in his mind, he feels like he doesn't trust anybody to do it because nobody cares the way we do.
Yeah. The problem I think they'll care more than you do.
I think the problem is that we're too busy and we're too high level to pay attention.
And that's where I was like, I didn't really agree with what you're saying on the asset manager being down in the weeds. I look at it completely opposite.
High level.
Absolutely. I don't want to get in manage cash flow and understand the global financials.
You're building budgets, though, and you're watching those budgets, and you're...
I'm managing cash flow projections based on information that my team's given me. And then does that make sense?
Yeah.
So my team makes the budget. We make it on the acquisition side. We estimate a budget going in. We finalize a budget during the due diligence. And then when we close, that budget's my reserve. So deposit that into the reserves. And then we lower our minimum reserve as we pay out that budget. But as we do that, it's like we just bought that 6 units. So we put $40,000 in the reserves. And it's like, okay, guys, here's the budget, $40,150. I put that in the reserves. I want you guys to finalize it. Make sure this is the budget. Also consider maintenance that we have built into our cash flows. What do we actually need to do so we can project out spending that $40,000 down? Does that make sense? So I don't get into the details. I just quarterback it all.
Yeah.
So your feeling is the asset manager is the visionary.
It's the quarterback.
Yeah.
I think we need a junior asset manager then, basically.
That's the other thing I was going to say is there's levels of it.
Yeah.
And it's really common for people to just build these huge portfolios, not maximize them. Saying's a great example of that.
Yeah. So think about this. So if you have 20 units in your portfolio that are $100 below rent at a 6 cap, that's $400,000 in value at a refi. That pays for itself if they just fix that.
Yeah.
So, like, when you're thinking about it, I think they would save us way more than they cost us.
We thought that. We hired one in one of our companies, and then it ended up...
Wrong person.
It was a wrong person because they
and bad training, probably.
They didn't have ownership lens. They couldn't see it through the lens of an owner. I think it has to be one of your partners. I think it has to be...
I don't think so.
You think you can hire it out?
So Bob Thomas, perfect example, Cannon, who is a really cool dude. He came through our program, helped him buy a fourplex. He partnered with Bob Thomas early on. So this kid, like, he's 24 years old, has bought in multiple deals. He was going under contract
He's so friggin' smart, dude.
He was going under contract on a 20 unit now that he was telling us about, because he's hanging out with all of us, seeing us do it, so he gets to learn at such a young age, but he's sharp. And he got connected with Bob early on to do like the property management and asset management stuff, and Bob trained him along the way, and now he's running that. And I think if we could find someone like that, no problem. We just have it's about the training, though.
Yeah, I think this person smart enough to do the job would want equity at some point. I think they would want to be part of the partnership.
Not everybody wants equity, but they need to have that level of understanding of what it takes to own equity and make the job do well. Like Eric is a really good example. He's been with me for 7 years. I've just trained him in every single step of the way, where now he can replicate me. He's a perfect asset manager, and when we get our portfolio and we double it, we have to have 2 asset managers, and so I'll be the main asset manager, and he'll be the guy behind.
Like, think about how much we got change ordered for on bids. Even like that alone is a full-time salary of one person if they go fix that problem.
Yeah, overseeing contractors on CapEx.
Dude, yeah.
I just hired an in-house project manager. He's paying for himself.
Yeah. So that's how every employee should be.
Yep.
There should be a net positive to the company.
Because how big is your portfolio with you and Paul, roughly, unit count wise?
I don't know unit count. It's probably between 30 and 40 million total in assets.
Yeah, so like between that, what me and you own, and what Stack owns.
Oh, we could easily pay somebody.
Yeah. Do we take a percentage of that rent? And I think it makes us more than it saves us. We just have to, and I really want, like, ideally, like, Mark is helping build this out, I think, because he's so detail oriented with that stuff, or I help him too. But I think like having someone do that helps us accelerate.
Yeah, when I see Mark doing that, I always think to myself, like, this is not highest and best use of Mark's time.
No. Yeah. Mark should be talking, like, doing the fundraising parts and thinking bigger.
Yeah, he likes to get in the weeds though a little bit. This
would let him though.
He does have the personality type I'm talking about of somebody who wants to be detail.
But if he's the first like high level one, and he has someone who can get into the weeds for him, so he's not having to do it, but he tells them how.
He should train that person.
Yes.
Yep.
As long as he could pass it off, and this comes down to leadership and delegation and being able to trust and train. And it's not easy. A lot of people have the mentality that if I want it done right, I have to do it myself. And you got to let people fail a little bit. You got to let them. You got to teach them what they need to know, and you got to let them go off and make a few mistakes. And then you just really got to have the right people. I mean, I think that's any business that you want to grow, regardless if it's a portfolio or another business. You're going to build your business around people,
and that's why you need to understand your ultimately your vision. Where are you going? What do you need to build out to? What does your org chart need to look like?
I think for us to get to the next level, like, it's a mandatory thing, because we're pretty good at acquiring deals, we're pretty good at structuring deals, we're pretty good at funding deals. Like, we're doing all these things pretty well. But if we tighten up operations, it lets us do so much more.
It's the missing piece.
Yes.
For us, asset management. But going back to your list of people, like, as they grow, they might be able to asset manage when they have 1 to 30 doors. And then when they get above that point, they're going to realize they're going to feel the same thing we feel, where it's like they're spread too thin, and you start to do everything you do starts to become diminished, because you're not staying in your lane and doing what you scaled, but you didn't build the infrastructure in order to scale properly.
Yeah.
And this is why we're doing a really good job of explaining why real estate is not a passive investment.
It's not.
This is all on top of having a property manager. That's like, this is
unless you want to be an LP and write a check and throw it in with a sponsor and let us go out and invest for you. It is not a passive investment.
Yep. And operators have to be looking into the future. What is my current org chart? Where am I going? What do I need to build to? And where, when people are like, where are you going? What's your goals? I really struggle with that answer, because I understand the importance of the org chart. And so my goals are based on, how's our org chart doing? You know
what's cool about real estate, though, is you could build a multi-billion-dollar company and run it with 10 or 12 people. You may have people in the field or whatever, but your corporate team doesn't have to be 50 or 100 employees. You can run this off of a pretty small team.
Yeah.
It's got to be the right team.
Mm-hmm. Trained well with the right eye, right? The right. You're all looking at the same prize, going the same direction, rowing the boat in the same direction.
Okay, so back to these stages here. So at that stage from beginner 0 to 3 deals, what skills do you think they start at? What role are they playing? What team do they have around them at the beginning? And then once they get to like that 10 unit count, they've done 3 deals. How does that change? So they have basically no skills, nothing starting out. It's just them.
Yeah. I don't know.
Well, then you probably are starting to have like brokers, lenders.
Yeah, well, it's
managers.
different for everybody, right? So
yeah, sure, but like generally,
again, it starts with the resource evaluation. So I'll just say what I've gone through. So when I first started buying real estate, I had good income, I had good credit, I knew how to value property, and I had realtor connections, and I had access to MLS. So I didn't need to kind of get that portion of it. But here's the other part. I didn't really understand financing. I didn't really understand property management. I didn't really understand what true net cash flow is. I didn't make good buys based on good metrics. I made buys because I had capital and the ability to purchase, and I thought this might be good. So the first part is they don't have someone helping them truly understand what a good deal is. So how do you get confidence in understanding what a good deal is? So you then, like the resource, what don't you have? Do you have access to properties? Okay, well, you need to get a realtor that you're working with, or you need a market to sellers. Are you comfortable talking to people? You don't like talking to people? You're not going direct to sellers and buying off market. Okay, well, then you need to work with wholesalers or realtors. So you need to say, what are my skill set, and then how do I go accomplish what I want? If you're working 60 hours a week and making a whole bunch of money, just go get a mortgage broker and a really good realtor, and then trade your cash that you save for real estate, and don't waste your time doing all the other stuff. And so you have to start with your resources, in my opinion.
That's a good point. And I think that what you're describing is really, truly an investor, somebody who's made money and they want to park it in real estate, whereas we're more operators. We're trying to use other people's money and go out and buy deals and make other people money. So you have to, early on, that's probably a really good distinction to look in the mirror and go like, is it in my heart that I want to be a real estate operator? Because it's a totally different thing than saying I want to grow wealth in real estate by parking my cash in real estate assets.
Right. Absolutely.
Okay, so stage 2 now for the people doing like they've done 4 to 10 deals, or they're trying to get from 4 to 10, 11 to 30 units. So for property acquisition, currently they've acquired a few deals. They're possibly using a few different strategies to acquire those, but they're unsure how to keep scaling, and they probably have some professional help at that point, like realtors selling deals and whatnot. So getting to the next level, they understand multiple deal types. They have a defined buy box and understand how to search the market and actually structure the deals to fit the buy box.
They probably don't have a defined buy box yet. They probably don't have enough experience to really narrow it down.
It's an in process.
Yeah, they're starting to define their buy box.
So I guess by the end of that, to get to the next level is what I'm saying. They have defined. So after they've done like that 4 to 10 deals, to go to the next level.
Yeah,
the infrastructure that you build on the 0 to 3 is going to be different infrastructure than when you get into the 3 to 11 or the 11 to 30.
Yeah, so that's what I'm trying to break down between all of them.
So you're not, like the lenders you used before are not going to be the lenders you use now. And the contractors used before, not the contractors you use now. You might even use different property management, or now you go from self-management to hiring property management. So as you move into the bigger world, you're going to be relying on a different team. And I think you should have, if you plan on building more than 3 doors, I think you should already have that infrastructure in mind, that I'm going to be moving into that world. You might still use some of your contacts from when you started, but there's a really good chance what you did is you learned the people not to work with, the banks that left you at the altar, the contractors that didn't finish your project, the people that screwed you over, the brokers that brought you shit deals. I mean, you're going to start to understand. I think you're going to learn more about what not to do than what to do. And as you move into that next phase, you're going to continue to build out that network of people that you're going to work with.
Yeah, so that's what I'm trying to map out really hard, is like where they're at now, what that actually looks like visually, and then what it looks like to go to the next level. So the next one is finance and funding. So like at that 4 to 10 deal stage, so they've done the 0 to 3, right? They're likely low on funds after buying their first few deals. They understand how owner-occupied loans work, but are unsure how else to finance deals. So to get to the next level, they're starting to utilize lines of credit, learning how to partner with others and or raise money. They understand how investment loan products work and commercial loans. and they're starting to grasp how to implement like more creative finance structures.
Well,
probably.
and they've started to build a base, so now you have some equity to work with.
They're equity
and you
rich,
can
cash
move.
poor.
You can move the pieces around to where you can go, hey, this duplex was really cool, but I've had it a couple years and I want to turn it into a sixplex. Like, you didn't have that to work with when you did your first deal.
Yeah.
And that's why we call the 1 to 4 units trading stock, is because it is such a volatile asset type that goes up and down in value. If you catch that wave when they're not so expensive and you can sell them when they're hot, you can move those into commercial assets. You might be able to turn 2 into 6, and it doesn't even cost you much more to buy a sixplex than it does a duplex at that stage. So I think that's one of the differences, is as you grow, you start to have new tools to work with that you didn't have before. This is where Logan just blows me away when I watch. It's like a beautiful mind. He's got the chalkboard out, and he's like looking at each piece of the puzzle and going like, this one should be refinanced and this one should be sold and traded into one like this. I mean, it's amazing once you learn how to work a portfolio and the magic of getting your real estate to buy you more real estate. It's just when you haven't started and you're not in yet, you don't have those options. So I think even from a lending standpoint, you're definitely more bankable when you have assets. That's one of the things that they're looking at. You can utilize that equity. You can borrow against it. We bought when we first met, we went and bought a sixplex together right out of the gate. And then we wanted to buy something else and use no money down or something. And they say, yeah, we'll do that, but we want to put a second against your sixplex. Well, if we didn't had we not bought that sixplex, we couldn't
have
that.
A piece. Yeah. So speaking of Logan, he sent me a funny text. He said, this was like a week ago. He said, there are 2 things in life I always look forward to: borrowing money and then paying it back on time with interest. I always tell my lenders this is not only how I make a living, but also my hobby. And then 2, being given small properties and turning them into big ones.
We got to get Logan back on the show.
Yeah, we do. I want to be here for that one. I need to be here for that one.
Okay, cool. So the next portion I had was where they're at with property management. So currently they're probably dealing with the day-to-day self themselves, understanding like the basics, but they're probably not the most organized with like the books and the process, and they're still kind of winging it. And then to get to the next level, they're probably outsourcing property management or building out internal systems to better manage it.
Ooh, you just made me think of something. Accounting. Through my real estate career, I've had to switch accountants as I move up, because as you go, they don't understand you anymore. I had one accountant, and he didn't understand anything I was doing, and he just filed my tax returns. And I realized I was paying way too much in taxes because he wasn't giving me the proper advice. He just wasn't the guy at the level of what I needed. So I switched. I got a better one. They saved me money on taxes, but then I told them I wanted to do a 1031 and go and do another deal, and they looked at me and said, why would you do that? You're going to pay taxes one day anyway. Why don't you just sell it and pay taxes and park that money into a IRA or account or something like that? And I was like,
I love when people get out of their lanes.
Ding,
ding, ding, ding, ding, ding, ding.
And I was like, I got to switch again. And so anyway, I've had to graduate through a few different CPAs to get into CPAs that understand me, what I'm trying to do. And so when you talk about building infrastructure, you're going to have a professional team. You're going to have accountants, you're going to have attorneys, probably multiples. And as you grow, you're going to outgrow some of those people that you were using early on, because quite honestly, in the beginning, you can't afford the ones at the top that are going to help you when you get up to a bigger number. So I would say that's something to be thinking of, is your professional team, your brokers even.
Yeah, you're getting into oversight. Go back to Michael's word from last night. It's the oversight. You're learning now that professionals only give you advice based on the context of what they've done historically, and you may not match their historic clients. Right. And you have to tell them, I understand why you want to do it this way, but I have experience. I look at it differently. You need to do it this way. And a really good example, our detox facility, the architect we hired, we've got 2 buildings. They're separate buildings. He's like, based on this plumbing fixture code, we're 4 toilets too short, but it's okay. We've got this other building. We'll just attach them. A big freaking construction project to attach 2 buildings so we have 4 toilets. I'm like, well, why don't we just apply for an adjustment?
Yeah.
Spend $3,000 and just deal with it from an appeal standpoint.
So would any architect have given you the same advice, or do you think there's another architect out there that would have thought the same thing you thought?
Exactly.
And that's the guy you want.
Yeah, but then you also have to understand getting vendors, especially when you're going from phase 1 to phase 2 to phase 3, these are brand new relationships. So you can't necessarily go get that perfect one. You're going to get the one that you learn from.
Yeah.
And like I said, the apartment building, we spent 80, I think it was even $100,000 and then didn't build it. I learned so much from working with those guys. I thought it was amazing. They're nice building downtown Portland, and they're doing projects in LA. And I'm like, well, was that what I should have been doing? Did I have the understanding, the expertise, and the knowledge to truly give oversight into that? Was I prudent? Does that make sense?
So learning more about not only the way you build your team internally, but how you build your team externally.
Absolutely.
And bringing on the professionals between, could be CPA, could be tax attorney, it could be attorneys, it could be architects, it could be contractors, it could be owner rep developers, it could be there's tons and tons and tons of people involved in helping you get to where you're going to grow your portfolio.
Yep.
And knowing where to find the right people that match up with your goals and the type of project that you're trying to do is super important. There are contractors you could bring in all over the place to go build you a project, and it will 100% not pencil because they are not the right contractor to build that project.
Yep, absolutely.
Next thing was investment analysis. So at this point, they understand the 4 ways real estate pays them, how to calculate it. To get to the next level, they're starting to understand the difference between current property performance and how to analyze where you can take it to, and then starting to understand different real estate metrics like cap rates, DSCRs, GRMs, and how leverage affects the deals.
How high up are you at this point?
This is like you're the 4 to 10 deal range, 11 to 30 units.
Yeah, I think you're definitely better be learning DSCR and that stuff by the time you get to 4 to 10 units. I think that's pretty important.
Yeah, so like during the stage from when you're entering it to what you have as you're going through it.
But the reality is you're not actually getting into DSCR until you do a 5+ unit loan. Like that's true because you just don't need it.
So 5 to 10.
Yeah. Well, you own 4 to 10 properties, but it's really once you get that commercial loan, then you understand, DSCR really freaking important. Yeah. And I wish it wasn't that way, because DSCR is probably more important to buying your first freaking house when you don't understand that PITI does not represent your expense load. You should understand DSCR in your first purchase.
There's more than one line on the expense on the expense side of the ledger.
Dude.
It pays for the mortgage and gives me an extra $100. Oh, well, what happens when you got to fix something?
Yeah.
You got $100. Hope you can keep it under that.
Yeah.
Then you got asset management. So at this point going in here, you have your SREO, you're starting to track your loan information and property performance. And then as you're moving forward, you're able to make informed investment decisions based on that SREO, such as when to sell or refinance, and you're starting to learn how to optimize your current holdings and make them perform better.
What's an SREO?
Schedule of real estate owned, showing all the properties you own.
To me, it's like your new credit report. Once credit reports don't matter anymore, it's your SREO. The bank never asks me anymore for my credit report. They will run it, but the first thing they always want to see is my financial statement, my schedule of real estate.
Yeah, the credit score that just determines what interest rate. Are you going to get a quarter point better rate because you got a higher score?
What's funny is the more properties you buy, the more the bank hates me. They're scared. They think that owning a lot of properties adds more risk, but they love to see the net worth.
Depending on the bank, though, right?
Well, and they love to see that you've operated. They would like to see that I buy less property than I do. I think I buy enough to scare them.
Well, you got to get into new banking territories, I think.
That's what we're doing. We're moving into agency. Once you get in an agency, they don't care. It's government money. They just write you checks.
Yeah. Okay, so that...
Dude, I talked to a lender about a small balance.
Small balance.
Freddie Mac.
It's an amazing program. We're doing a few of them right now.
Mm-hmm.
Yeah, amazing program.
Okay, so that was like where you're at, and then how you get to the next stage when you're doing 4 to 10 deals and you own like 11 to 30 units. And then the next one is when you're doing like 11 plus deals and 31 plus doors. So for property acquisition, where you're at, you understand how to find deals on the market, how to structure them to make it work. You understand the differences between commercial and residential real estate. You're consistently offering on deals. You want to continue scaling, but you're not sure how to do bigger deals, and you probably have shiny object syndrome. So going to the next level, you understand like how to actually raise money. Maybe you're syndicating deals. You know how to form partnerships, understand the roles needed within all the deals and larger deals, and then you're narrowing down your focus to be able to do more deal types of a specific type.
By now you better have a buy box, and you better understand that you're not going to be able to build what you want without other people's money. So you're now not only just trying to find the banks to give you money to do your deal, you're also looking for investors, or you're looking for partners with money.
You've got 5 to 6 tax returns, if not more.
Yep.
You've got a whole different structure of partnerships.
Cool. Then finance and funding. So you have funded deals multiple ways. You understand partnerships, lines of credit, commercial loans, 1031 exchanges, and some creative finance. And then going to the next level, you have defined financing strategies that fit the current buy box you are working on, so you can keep on repeating it more efficiently.
Yeah, and then the timelines of your deals can change, right? So early on, most people are buying in-place cash flow or something that they can, get it on the market and getting cash flow going relatively quickly. For example, where you guys are at, you're building new construction. You're doing 18-month projects where you don't have a dime coming in. You're spending millions and millions and millions of dollars until you actually get some type of performance. And so once you have a big enough portfolio, now you have the foundation, you have the base that then gives you the ability to go take larger risks, to work on longer time frames, to expose yourself to different levels of...
Yeah, building the base is a big thing. Paul and I talk about that a lot because some people will think that they should go do the same thing that a Paul Curley does, but they shouldn't, because he's got such a base that he can go out and buy a building he wants to buy just because he wants to buy it, and that's not how he started.
Yep.
I
wouldn't have got through the condo stuff if I didn't have a portfolio. Would not have happened. Wouldn't have been able to do it.
It's an amazing safety net.
Absolutely. Yeah. And you think of it, it's like, well, that's time freedom, that's passive income. No, it gives you safety. Portfolio, passive income has nothing to do with being passive, has nothing to do with freedom. It gives you safety, and that safety gives you options. And that options is what gives you freedom and control.
So at what point does it give you the freedom? Is it you just stop growing and you let the stuff pay itself
For
off?
you, never. You will never stop. But so we're completely opposite of the 0 to 100 tribe guys.
Yeah, we are.
Because they're all about real estate to give you time freedom and whatnot, and we're all about we want to do more deals.
And I don't think R1 is safety. I think R1 is false safety.
R1 is how you start to scale because you get some more time freedom, because now you can quit the day job. You can start focusing on the portfolio more and really whatever you want to do.
It's your first. Is it R1 like your first level of retirement?
First level of retirement.
It's like I don't have to work, but I want
R1
to.
is Rich Dad Poor Dad's definition of financial freedom, which is not free, which is your passive income covers
your
expenses.
Your basic living expenses. Yeah. But it's funny because like what we do is complete opposite of what those guys do.
Yeah. Well, because we're deal junkies. We just want to do more deals.
Yeah, they just aren't. They are not deal junkies, are they?
No, they're using real estate as a tool to get the lifestyle that they want.
Which I think is a healthy way to look at it.
Yeah, no, it's awesome.
They had a reason for doing what they did.
Look, you don't use the word junkie because you're healthy.
Yeah, there you go. There you go. But we're having more fun, right?
Damn right we are.
We say we are.
We're fighting on our podcast. They ready to do that?
We're almost about ready to have a heart attack most days. But that's fun, isn't it?
So next thing was property management. So at this point, you have third-party management in place, or your systems are built out to self-manage. To get to the next level, you have systems for oversights of multiple property managers. Or internally, you're removed from the day-to-day management and just making large decisions.
I think you should do that early on. I did it from the first property. I threw the keys to the property manager. I said, I don't want to be involved in any. I've never leased a unit. I've never talked to a tenant. I don't know the names of my tenants. For me, I try to keep it as much business as possible. I think you're right. Doing it is probably a good lesson. We had Dane do one of our houses. Is he still managing that house?
Yeah.
You also had a lot different level of leadership experience coming out of the car world.
That's true.
You got a lot of duration. B, a very high-paced industry with lots of money flowing through it.
I was connected to a large property management company when I bought my first deal with my partner. Yeah. So,
contrast that to me. I was not a businessman. I had an appraisal company, but I wasn't a good leader. I wasn't an actual businessman. I didn't think of it in that arena. So starting our property management company and wearing every hat was just for me to learn how to become a business owner. of, oh, well, if you're going to own this business, it has all these operations and I don't know how to do any of them. I need to kind of figure it out so I understand what this business is.
Yeah, it makes sense.
For investment analysis, you understand property level analysis, but you need a better understanding of IRR, AAR, fee structures, and how partnerships affect returns.
What's ARR?
Average annual return, similar to IRR.
I heard ARR, not AAR.
And then to get to the next level,
AARP.
Those are our sellers.
So you need to understand the different high-level metrics used to analyze deals and what specific people are looking for within their investments. You can prevent your investment analysis in a clean and easy-to-understand package for lenders, appraisers, partners, and investors.
So you start to build an executive summary or some sort of offering memorandum to where you can break down a deal, present it in a professional way of here are the risks, here's the rewards, here's what we're looking to accomplish. We want you to join us on a deal.
And then for asset management, so where you're at that 11 plus deals phase, you have your SREO that helps you manage your portfolio and make decisions. And then getting to the next level, I didn't fill that part out yet, so you tell me.
Are you tracking like when loans come due and stuff?
Yeah, we have all that tracked.
I mean, are you paying attention to it and thinking about like, next year this one comes due and the year after that comes due?
No, well, yes and no. So our model is long-term fixed rate debt, so we try to hedge risk. So a lot
most
of our
it's 10-year.
Most of it's 10-year, or our loans don't even term out; they just go adjustable. So like what we're doing is a lot of these projects take 3 to 5 years to stabilize, so we're not even worried about it. And then at that 5, we know we're going to hold even if rates go up. And then we'll look to refinance or do whatever. Some of the shorter stuff, like we'll have 2-year projects, right? And we're looking at those and tracking them a little closer. But we have it all tracked in the sheet of like, here's the origination date, here's the loan maturity date.
And we're not really traders in the same way that Logan uses our fund. So we're not looking at how much equity we have in a deal and looking to move that equity around. It's just... We're just stabilized. We're more Paul Curley style.
Yeah, I like
buy everything and hold it forever.
I mean, I like Paul's because I agree with Logan and how you trade and scale with it. But I like what you say of like, why trade? Like, let's figure out how to keep this one and get the next one.
If you don't have to trade, don't. If that's the only way to go into the next deal that you want to do,
then sure.
Then trade.
Because these things are unlimited money printing machines if you hold them. You never have to get rid of them.
Yeah, we're not chasing the golden egg. We're chasing the golden goose.
Yeah. But
true,
as many of them as we can get.
Yeah, so my goal with this is to define this stuff at a high level and then actually break down in detail so people have action things. So through video format, PDF format, and all the ways people consume content. You like that? You think it would be helpful to people?
Say that one more time.
Okay, so all that stuff I just went through, right?
Yeah.
That's the high level understanding of what we're looking at. And now I want to break those things down into actual detail of like, okay, how do you take action to do these and understand them? And here's all the information. And I want to give it to people.
So you're building like a syllabus or a curriculum around wherever you're at. If you're a level 1, 2, or 3 investor, here are the things that you need to know.
Yeah.
And as you move up into these different levels, here's what's going to change.
Yep. So I can say, if this is you own this many units, describe their life and what it looks like.
Yeah. The only thing I would change is I'd take the unit part out of that. Just make it more
deals.
Skills. Does that make like so? For example, a lot of the really advanced stuff that you guys are talking about, I'm just now getting there. But most people would say, "Well, you're pretty damn built out," just because I stayed in that arena for a long period of time and stayed comfortable.
Yeah.
Does that make sense?
No, it does. But the hard part is to like communicate it to someone and grab their attention to look at. Because how we give this to people is through ads and whatnot. So it's like for me to talk to someone and be like, "Hey, if you own 11 to 20 units, this is probably what you're at." Like
from a marketing standpoint, it makes more sense.
Yeah, because this is all free. Like this is free stuff that we're going to spend.
It's the top of your funnel.
Tons of hours on to put out to help people. Like, so I want to make sure it's of value before I actually go spend 100 hours to go do this. So then I got to go put it all in video format so people can consume it that way.
Does it take you 100 hours to cut and paste into chat?
It's not. We don't do any of that. Well, we do that, but not for like because this is just custom. So I tried to do this on ChatGPT, and it's like it gives me a good starting point, but it's so much.
And
custom.
you're going to do this in videos? Are you going to
and
studio
and
do
PDF?
Professional videos?
We already have all that. Yeah,
okay.
Yeah. So we have in-house editing and everything. So like we have courses already that are basic stuff, but this is like a next level thing that people would charge tens of thousands of dollars for that we're just going to give to people as the idea. If like, do you think it's of value? So that's my thing. I don't want to go make this and then find out if it's of value.
I don't think it's of value.
Okay.
But I don't look at it like that.
I think...
Meaning, if I read that, it would have no value to me. That's how I analyze it. Now,
well, you're above all these stages, though. So, like, you're not the avatar of the person.
Correct. That's what I'm saying.
Yeah.
And so I don't know how to put myself in people's shoes to market to them.
Because you don't have empathy.
Here's my...
Yeah, I don't fucking care about people. I'm a narcissist.
And then he'll say, I love you. I love everybody.
I love everybody.
But I don't have empathy.
Except Chris Bayard. We got that out in the last episode.
Mike has resentment. So here's...
it's what keeps me ornery.
Here's what I'll say, is that there are people out there that are hungry for knowledge. And those people would probably really be into this information that you put together. But I think the majority of people, they just want you to do it for them. And so if I were out buying 0 to 3 units, I would call the Vesta team. And I would say, guys, find me a deal and tell me it's a deal and show me how to get into the deal, because it took me 3 years to go buy my first duplex. And if I were to start over today, I'd call you, and in 3 weeks I would buy my first duplex.
And he's got really good anecdotal evidence of that. Like what you said, 5 people that you had one-on-ones with to help them buy their deals just invested passively in your new construction project, right? So that's exactly what you just said.
Do it for me.
Yeah. So, but to truly help someone, like the program we're running is, I want to give people this education.
You
that people
truly
want
to help someone, or are you just trying to raise?
No, like this is so like it's a long-term vision. If I help other people, it helps me, right? So like I'm planting seeds for 10 years out of like we're making a ton of people rich. They'll know, like, and trust us, and they'll invest in our deals. Is the idea.
Or they'll become our competitors, and they'll just go start their own.
Or our partners, or there's so many deals, it doesn't even matter.
No, you're doing it the sophisticated way. This is essentially what we did when we created our classes 12 years ago. It was just in person. It was just packaged information to make people much more valuable. And as they got more valuable, and you were more like as you all grew together, they just
build street cred.
For people who actually want to do this, like we could do it for them, yes. But we don't necessarily want to, because it's not my decision. It's not my life. And then, so I want them to understand and make it for them, and me to give. We want to hold their hand, help them, and streamline it. But we don't want to do it for them necessarily.
One thing I would recommend is, as you record these videos, to do it in front of a live audience and let there be Q&A, because you need people asking questions. You move really fast, and your brain works on a different level than most people's, and so I think that it could get really confusing to just sit there and try to absorb all this information. I think people would rather just call you and ask questions than to sit and watch you talk on a video. But if you had a live audience that could ask questions and you guys could have a kind of a conversation about it, that would be very helpful.
Yeah, because so the idea is that this is all made and pre-recorded and whatnot. So someone interested in this thing comes across an ad or whatever, and they see like I own 0 to 3 deals, and they can consume this information, and then we have the conversation, because now they're way more prepared for that conversation, and we can help them.
It gives them a baseline of knowledge, so there's some framework, some reference that they can.
Yeah, because to talk to someone who knows nothing, like they'll be like, "Yeah, you guys sound smart. Like, let's go do it." But it's not. Again, it's not my life. Like, it's their
your initial
life.
Training session.
Yeah. So like I'm thinking this is like a program. So now people can come in the funnel, and we can help guide them along the way, and then we prepare them to be more ready for the next step.
I got two thoughts on this.
Yeah.
One, how people work. So most people will probably be up late at night for months getting that information in and not doing anything with it.
So I have to make it as third grade level understanding and as short as possible, and the highest amount of value in the least amount of time possible.
And here's an example of how it works. We've all experienced this, but we just got a contact form recently. It was someone who listened to a podcast a while ago. It was actually my old partner's. It was on Shauna, so his podcast, and he reached out because of that. And then I had contact with him. I was like, yeah, I was on there as well, trying to figure out what he'd listened to. And then that night he sent me 3 more texts. He's just up late at night listening to podcast episodes. I like this one. I like that one. I like what you said here. He's just. So people will just kind of get to the information page and not do anything with it. Then the other part is you setting them up for success in your program. The most value, when I spent $26,000 on a Rich Dad Poor Dad education package, the best value was that stupid little book that they mailed to you after you wrote that check. It wasn't even the $26,000. It was the $500 to go to the 3-day week, and I spent $500. They mailed a book. It was like 300 pages. It was just a chapter of everything. This is how you wholesale. This is wrapping notes. This is seller financing. This is... An amazing book. So when I went there, I was probably 1 out of 5 people that read it. I knew everything because I read the book. So what you're doing is you're just getting it so they're ready to learn faster, which is going to make your time much more useful and make them much more successful. The other thing is you're doing this for a purpose, which is to help people. You have a bigger vision. You understand the vision. There's still going to be people that just want you to do it for them. And this is marketing, and it's your job to then filter. Oh, you want me to do it for you? Okay, you're more of a passive investor. This is the type of conversation we're having versus you're active, you're an operator. We're really going to get in the weeds and train you on how to do that.
Okay. So
and then you can build that, because that's the top of your funnel. You build it out to different types of programs.
Yes.
Yeah.
So you think this makes sense generally and is a good use to do?
Yeah, absolutely.
I don't know.
Refine it.
I don't understand what is your motive? What are you trying to get out of it? Just to build a network and a community?
No, so the idea is it's a lead magnet. So it's something to get someone in the door to acquire more clients. Because that's our whole thing.
To broker or to invest with us or
to
partner,
broker, help
whatever.
them build and scale their portfolio through Vesta and helping them buy more deals and own more real estate.
So I look at it this way. I built kind of my acquisition company based off of property management and asset management. Trevor's building his system based off brokerage.
Yeah.
Yeah.
Yeah, you're offering all those other tools for free as just if we do a deal together, you get paid a commission, and that's all you get out of it.
Mm-hmm. So this is like the webinars we run or the free stuff we give, right? That's lead magnets. So I'm trying to make something of more value than that to attract more people and more specific kinds of people who align with what we do.
I think you should have a page just for memes. I think you should teach everybody how to do this through memes. That's the only way I learn. I don't know I can't learn anything without them. I wouldn't know anything.
You're a fucking unicorn, dude. You can't train to you. That's a lowest common denominator.
I literally need like a funny picture and like one sentence.
Yeah.
That's because you're able to understand things so much. Because we can tell him the title of a book, and then he can understand the whole book immediately. Not many people can do that.
Well, you have to be able to do that if you don't know how to read.
So again, you think good use of time or bad use of time to do this?
I think that you can only answer that question. Does it help you?
I'd say this. Significantly more efficient and effective way to do that than the way I did it over 12 years. Because this can be done in 100 hours.
Mm-hmm.
Yeah.
I think it adds value, and I think that's the whole point.
So the goal is to add way more value than the cost for someone to use it.
You're putting the information out there. It does position you as an expert in the field. It does bring you leads. It brings any what are they calling it now? The attention economy.
Mm-hmm.
Like, so you're really good at every time I open Facebook now, I almost don't even want to open it.
It's pretty disgusting.
Every single post is something about Trevor.
Although the Vesta shirt with the dish soap.
Yeah, why'd you take that down? I love that.
Did it get taken down?
I don't know.
Avery was doing it.
She switched it to something else. First it was Trevor holding two bottles of dish soap. Yeah.
That was amazing. And for anyone, like the dish soap in the...
in his protein shake. Yeah, I think if it helps you and it helps solidify your goals, and I think also like just having this conversation, we decided, well, maybe we should have an asset manager, right? Like I think that this helps everybody, and the more value you can add, I think you make it concise. You offer it for free and make it simple. Very, 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 very simple. If people want to get into the weeds, they can have the phone call.
Yeah.
They can dig in a little deeper. You could even have some videos that are an hour long where you go deep dive, but give everybody the 30-second snippet or a meme or something that really captures the concept and the essence of what you're trying to teach them, rather than I just like to hear my own voice, so I'm going to talk on Facebook all day long.
That's what I do.
You do a good job. I like Mike's memes. It's just one. It's like 8 words, 6 words.
My dad,
but I don't understand them all.
Yeah, my dad said, "Speak clearly. You talk like a politician." I was like, "That's the fucking point."
Can't figure out where you really stand, Mike.
Exactly. Keep them guessing. No one knows my next move. If you listen to me, would you think I'm a Democrat or a Republican?
You're a Democrat.
Definitely not.
Oh.
I'd say Green Party.
Yeah. Tell me I'm a Republican.
I don't know if you are.
I'd say definitely not.
Yeah, I would say you're not a Republican.
I'm not a Republican or a Democrat, but I talk about that all the time.
I think the fact that people have to put themselves in the box of a Democrat and a Republican.
Well, we talked about this
terrible.
before, that the largest number of voters are independent now in America. We make up the large, and I am registered libertarian. I know everybody thinks I wear a tinfoil hat, but
We're registered independent. I don't get a vote in the primaries.
me neither. Well, I do for libertarian if they have a candidate, but that's not very often. What are you, Trevor?
Me?
He used to think he was a Republican, and then I don't know. He started trying to save the turtles and stuff there for a minute. So I don't know.
I'm always
I love
saving the
turtles. I
environment.
love turtles too. Do you vote?
He's getting really
This is-
quiet. He's
He's turning red. He's turning red right now.
It's a touchy subject.
He's a touchy.
What do you think of Elon Musk?
I don't really think about it, but I had this thought. So you always called him Elon,
Yeah.
and I was assuming it's because you don't listen to anything or hear
But
his
that's
name
what they
be
used to
pronounced,
call
but you
him.
read it. Oh, I don't know.
I do read it as Elon.
Yeah, that's
but
what I
I
thought.
think that's like way back in the day. That's what they used to call. That's what everybody called him.
Don't know.
And then he got.
Are you talking
famous.
about Lex Luthor?
All right, we're running long. We gotta close out.
Let's end it right there.
Oh, all right, guys.
I love everybody.
Who should we give a shout out to? Who do you want to give a shout out to? Michael Hamilton,
Sure. We shot him out last time, but we'll shout him out again.
SMI,
Sure.
Rare Bird, Vesta.
I think we
the
should just
Vesta
end
team.
it.
All of them all. Just stop.
I gotta say one thing before we
Okay.
finish. There was an episode a while back where I wasn't on, and you guys were just having this crazy conversation about something, and just out of the blue, like Trevor just goes, "I want to talk about how everyone thinks Gabe was always rich and he wasn't. This is insane." And then like the very next thing is Mike says something like, "If I had to lose any of my senses, I would be blind." and Dane goes, "What?" And Trevor goes, "I would rather lose my sense of touch." And Dane is going, "What are you guys talking about?" And then Trevor goes, "Okay, guys, thanks for listening. Goodbye." I was like, that might have been the worst ending of any Deal Junkies episode if we have to vote.
That's the best ending of every ever.
What are you guys talking about right now?
Sometimes life just comes off the tracks. You just gotta crash. Just let the crash happen and rebuild it from there. Show up next day.
All right, Deal Junkies, we love you guys. Keep listening to us. Please share us, and we will see you next time.